we could be looking at a head and shoulders type pattern. We could have a pause here, but I don't actually see any reason for, any substantial correction. If it got a bit ahead of itself, okay, it might correct a bit. But I'm actually not.
A little bit of profit taking.
Yeah, right. Nobody goes broke taking profits. I just saw, people get so emotional on Twitter. I just saw somebody on Twitter slamming me for posting $2,400 gold. Oh, it's gone. It's over. It's done. It's like, come on. You're talking about an intra-hour fluctuation. We didn't even know where it's going to close today. But okay, say it drops back to 2350 or something. 2350? Are you kidding me? That's a fantastic price.
From central banks to Costco customers, it seems everyone is buying gold these days. The price of spot gold reached above $2,400 per ounce after hitting record highs for 7 straight sessions and trading at $2,344 per ounce. Year on year, gold is up 16.5%. Investors who expect the Federal Reserve to cut its benchmark interest rate are the main driving prices. Still, the surge is boosted by other factors, including central banks, led by China, buying up gold to ease reliance on US dollars. UBS sees the expectation of Fed rate cuts as still the main driver for bullish sentiment toward gold, according to an April 9th research note. The ongoing gold market rally has sparked discussions about its sustainability and potential future trajectories. Lobo Tiggre, the editor at the Independent Speculator, sees considerable potential for this upward trend to persist over the long term. While gold remains a focal point, Lobo finds silver's recent performance particularly intriguing. Traditionally, silver tends to lag behind gold at the outset of a bull market, eventually catching up and sometimes outpacing gold's gains towards the end. But once it gets going, it really gets going. Historically, gold will shoot up first, and then you will see silver take off when you least expect it. And silver always outperforms. That's exactly what we could see play out again. However, this time, Lobo sees silver appears to be closely tracking gold, deviating from historical patterns. This discrepancy prompts speculation about whether the bull market phase for both gold and silver is nearing its conclusion. With gold prices having already scored multiple record highs in recent weeks, many analysts are now turning their attention to silver, knowing well enough that, if history is anything to go by, silver will be next in line to shoot for record highs. We will present clips from Lobo Tigre's interview with Kitco News. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
There are bigger things going. Well, bigger. I mean, it's hard to say bigger than something that could actually turn into World War III. And I find it striking that as you and I are recording, gold has actually plunged a little bit. I mean, there's people out there pulling their hair out, oh, it's plunging. It's still near nominal all-time highs, but it has retreated sharply this afternoon. It's a price that makes, gold miners, even mediocre ones, gush cash at those levels if they haven't completely screwed up. And the gold projects out there, their price assumptions in their decision-making models, a $2,000 price assumption was an aggressive one, so those projects look great. So I'm actually not worried about gold at all. And I know you'll get there, but I'm quite interested. To me, the big surprise is silver, Jeremy. I am bullish on silver, but even a diehard a silver bug will tell you that silver typically lags at the beginning of a breakout and then catches up with gold, more than catches up with gold. By the end of a bull market, silver's percentage gains are usually higher than gold's, but it lags. And those bull markets, those are multi-year markets. Right? So you're asking me, do I think this has legs? Yes. I mean, historically, a gold bull market is a multi-year affair, and silver lags for like the first year. And this time you look at those hockey stick inflection points in gold and silver is right there. There's no lag. And so there are some people out there saying, oh, yes, this is it. Silver's finally catching up with gold. Well, hold on. If this is silver finally catching up with gold, as it has done historically, that means we're approaching the end of this bull market. Like silver catches up with gold at the end. So if your thesis is silver is now doing what it always does, catching up with gold, you're implicitly saying we're approaching the end of this bull market for gold and silver.
Central banks have significantly increased their demand for gold over the past few years, with a notable surge in purchases since 2010. Central banks have amassed around 7,800 tons of gold, with over a quarter acquired in the last 2 years, mostly from emerging countries. China leads the pack, with the People's Bank of China adding a massive 225 tons to its reserves last year, the largest increase since 1977. However, despite this growth, gold reserves in China make up only 4% of its total reserves. Lobo underscores the impact of central bank gold buying on supporting gold prices, especially during periods characterized by higher interest rates and reduced geopolitical tensions. Interestingly, while central banks have been actively purchasing physical gold stocks have not performed as well, a phenomenon Lobo attributes to their preference for physical gold over stocks. This preference causes gold stocks to be more sensitive to macroeconomic conditions than gold's actual price. Regarding the identity of the new buyer entering the marketplace, Lobo suggests that it may be linked to a broader trend of shifting asset allocation towards safe haven assets like gold. He highlights recent global uncertainties, such as geopolitical tensions and inflation concerns, as potential catalysts for the increased interest in gold as a safe haven asset.
I do subscribe to the view that many of my peers have, that central bank gold buying has been a big factor here. Now, that's not just recently, that's been ongoing. So the more hockey stick inflection point, I do see a new buyer. Now, I don't claim to have secret sources in the CIA or space aliens, monitoring out there on my behalf. So I can't tell you, Jeremy, that I know, this is it. And buy my newsletter and you'll find out the secret way to profit, right? That's just not the way I do things. But the data tells me that there is a new buyer in this marketplace. But the central bank gold buying has propped gold up or held it up when higher interest rates and reduced tensions before October 6th should have been headwinds for gold. The higher dollar, there were a number of things that would have been a headwind for gold. And I'm sure we'll get there. But I think this is part of why the gold stocks underperformed, because there were visible headwinds for gold. And the central banks were buying physical gold, not stocks. So the stocks responded to the macro setting more than gold seemed to do. And suddenly now we have this hockey stick inflection point. I'm hoping that it goes much higher as a gold bug. So what I get from that, Jeremy, is there is a new buyer. It's not just central banks. There is a new buyer. Now, who is he or she? Obviously, it's not one person. I cannot tell you I know the answer to that. You've spoken to Rick Roll, and I'm sure he's told you, and our audience has heard before, that Rick likes to say that the average allocation to safe havens, gold, like gold in, global portfolios is on the order of 2%. We're not talking crazy gold bugs buying, putting everything in gold. We're talking about overall global asset allocation over the decades being around the order of 2%. And recently, it's only been on the order of 0.5%. So if people decided that they needed more of a safe haven, not necessarily because of today's news, but just the context that we're in today, that could be the sort of thing that brings this new buyer to the table. Over the last few months, people saying, you know what? We've got two hot wars, either of which could turn into World War III. We've got inflation getting sticky, right? And the world is just the sort of place where a bit of a physical safe haven asset might be a good thing. And that could be your new buyer. And I want to stress one point there. I said inflation being sticky, it's US inflation. And of course, the world is larger than the US, but commodities are priced in dollars. The gold price, I like to call the gold dollar exchange ratio, because I think of gold as money, and therefore it's a Forex question. So it famously, though, your predecessor there at Kitco would always, point out to me that gold doesn't correlate very well with CPI. Well, that's because it leads. Like when people get afraid, and we just saw the new University of Michigan numbers saying that expectations for inflation have popped back up again, right? So when people think their money is going to become worth less, that's when people start buying gold. Yeah. So this sticky inflation story is really important. The Fed has guided it's going to be cutting rates, and the Paul Krugman told us just last year that we beat inflation. There was a problem, and it's gone. It's done. It's over. Yeah. Right. I don't have the exact quote on the top of my head, right? But so for people to suddenly say, "Oh, wait! I thought we were told it was over. We don't have to worry about inflation. We're well on our way to 2%," and suddenly, no, it's gone back up to 3.5%. That's the kind of thing that I think can get this missing buyer into the marketplace, right, Jeremy?
Gold prices are set to keep rising, and experts predict they could reach as high as $2,500 soon. This bullish trend is expected to continue until the end of the year, unless something unexpected happens. Although there might be some ups and downs, the overall outlook for gold remains positive. Lobo is confident about the future of the gold and silver market, highlighting its long-term strength. Share your thoughts on Lobo's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.